This is GBP/JPY 1 hour time frame, and I'll be using the 1 hour time frame as my higher time frame. And if you do remember, I said on the previous part that if you're using the H4 as your higher time frame, your M15 will be the lower time frame. And if you're using the H1 as the higher time frame, like in our case here, then we will be using the M5 as the lower time frame. And so is the same if you're using the M15, the M3 will be the lower time frame, and finally for the scalpers, M5, M1 as the lower time frame. And so in this case, since I'm using the H1 as the higher time frame, we will be using the M5 as the lower time frame. So I'll be marking the key areas and liquidity levels on the H1, and upon interacting with the key areas, that's when now I'll be shifting to the M5 for entries. Right, so without further ado, let me dive in. And to this chart, we can clearly see that price has made a change of character, that is a bearish break of structure, after it had recently made a bullish break of structure. So this means that price is no longer in an uptrend right now, but now it's bearish. Alright, and on the bearish impulsive leg, price took out the major inducement, confirming this one here is a swing point, but then later price, as you can see, it reversed and broke past the swing point, confirming a break of structure. Then later price reversed again and broke past our trading range high, making a bullish break of structure or another change of character. So this means now we have changed bias again from being bearish to now bullish. And again on the bullish impulsive leg, price took out the major inducement, came all the way mitigating the extreme order flow, and then reversed again towards breaking past our swing point exactly right there, making a valid break of structure. And then after that, I don't see any other valid break of structure because this break is not associated with any inducement takeout, as well as this other break is not associated with any inducement takeout. So this means starting from this low all the way to here, all of this is just a one impulsive leg. So this means now we have just identified our current trading range, and so let me identify our key areas and liquidity levels. Alright, and since we have just identified our impulsive leg, then we need to, or the next step is obviously marking the inducement. And right here, this one here is the inducement. Why is this the inducement and not this one here to be the inducement? Because that's actually the recently formed valid pullback. You can clearly see that this one here, I mean right here, starting from this high all the way down here, you can clearly see that this pullback is engulfed inside this whole bearish leg. So this means that our pullback low is not that one, but rather this one. So this one here will be the major inducement. Alright, so right now I will not do anything. I will not mark the key areas. I need first price to take out the major inducement before I tire myself marking the key areas, or the POIs that is. So I'll run price, and exactly right here price spiked down and took out or break past the inducement. So this now is actually the right moment to mark the POIs, or the key areas. And also we said once the major inducement or the minor inducement is taken out, then this high is now a confirmed swing point. So now we can confidently mark this low as our high, I mean this low as the low of our trading range, and that high as our high of our trading range. So this means our trading range ranges from this low all the way to where my fib level, or to where my fib point ended. Alright, so right now is now the time to mark the POIs, or to mark the key areas. And like I said, when we are marking the POIs, we start with the order flows, because the order flows are primary and the order blocks are secondary. Alright, so from the extreme, we can clearly see that this one here is the, this one here is the order flow, and obviously it's mitigated. So coming up to the next right here, it's also mitigated. So right now, there is no any order flow in our range. So this means we'll now be trashing the order flows and now consider marking the order blocks. Alright, so starting from the extreme of the range, I need a candle that is associated with a fair value gap. And right here, I can see this candle is the one that is associated with a fair value gap. From the extreme, if I check all these candles, there is no any candle that is associated with a fair value gap. And like I said, on identifying order blocks, we don't consider the color. I mean, if the candle is bullish or bearish, it doesn't matter. The color of the candle does not matter as long as the candle is associated with a fair value gap and that fair value gap is not fully mitigated or fully filled. Right, so this here on the extreme, I mean this one here is now our extreme order block. All right, coming up here, where is the other order block? All right, the other order block actually is this one, where price reacted from, because I don't see any other order block. Because right here we can clearly see that this is mitigated. Right, this here is also mitigated. If I were to mark this candle, this is also mitigated by this wick. It fully mitigated the fair value gap, so that there is no any other order block. So right now I will now be marking the engineering liquidity, and yeah, that's final. So we say the engineering liquidity is the liquidity resting below the low, the pullback that is right before the extreme POI, and in this case is an order block. So this one here is our engineering liquidity. And this case, since we only have one valid order block in our range, this means our range lacks a decisional POI or a decisional order block. Right, so this means now I will only be waiting for an engineering liquidity sweep or a mitigation of the extreme POI. Alright, so let me mark the price and see what price eventually unfolds. Exactly right here. You can clearly see price here. Exactly, price swept the engineering liquidity and at the same time it mitigated the extreme POI. So this here is a very strong reversal. So this means now this is the perfect moment or the right moment to shift into the lower time frame. Alright, so right now, since this one here is the 1 hour time frame and price has interacted with our key areas, or I mean a key area that is the extreme order block and a sweep of the engineering liquidity. So this means now I'll be diving into my lower time frame or my entry time frame, since we are not taking the entry directly from the 1 hour. So right now I'm diving into the 5 minute, or I'm shifting into the 5 minute time frame. And to the lower time frame, we can clearly see that this one here is the recent break of structure. So now where is the major inducement? All right, let's see if here down we can spot a major inducement. And exactly right here, we can clearly see there is a pullback exactly right here. That's the pullback, and this one here is the low. And since that's the pullback, I mean the recently formed valid pullback. Which one? I mean the one that I marked, this one here. This one is the major inducement, and we say that upon mitigating a higher time frame point of interest or a key area, or upon interacting or upon price sweeping a liquidity level, that is a higher time frame liquidity level, the major inducement on the lower time frame changes its role from being an inducement to being a change of character. So since this one here is our major inducement, it changed its role from being an inducement to now being a change of character. Right, so now this year price has made a change of character, and right now I'm looking forward for price to create an inducement so that now I can participate into the trade. And right now I'm waiting for price to create the lower time frame inducement before now I can participate, or before now I can mark the lower time frame POIs. And exactly right here we can clearly see price has created that inducement, and if price now comes and breaks past this, that's when I will consider marking the POIs. Alright, and exactly right here, price broke past the inducement, and where is now the POI or the key area? We obviously start with the inducement. And on marking POIs, we all know that we usually start with the order flows. And right now, if I check the order flow, I will mark this one here as my order flow. And if I was to mark the order block, then this one here would have been the correct order block. I mean, this one here. So that's the order block, the extreme order block that is. And where is the right? I can see this one here. You can clearly see that it is associated with an fair value gap. I mean this fair value gap, and the fair value gap is also not mitigated. But like I said, we usually take entries from the but we usually don't take entries from the fair value gap. It's either an order block or an order flow. So right now, just like I said on the previous part, the best option is usually setting buy limit orders and sell limit orders. Don't wait for a reaction from the POI so that you can place, I mean, the buy or the sell and then put to a sell, or yeah, put to a sell below or above the reaction. No, that's, yeah, that works also, but I just found that this way of actually using the sell limit orders and buy limit orders works best than waiting for the POI reaction. So right now, instead of me waiting for price to mitigate this extreme order flow before I actually take the entry, I will just place my buy limit order from this extreme order block, my stop loss below here, I mean below the order flow, because I don't know if price will react from this order block and just make the ultimate reversal. It wouldn't be making sense for me to place my stop loss below the order block. So right now, this, like, the safer stop loss needs to be below that low, and obviously your final TP, it will obviously be the higher time frame external liquidity, and that is this one here. So that's the final TP. All right, so let's see how price plays out exactly right here. So all right, price ended up reversing from the consequent encroachment of that fair value gap without mitigating any of our key areas. So that is our missed entry, and we say that if you missed the first entry, there is no problem, you can still catch the next as long as we haven't made it out to the higher time frame external liquidity. All right, so this here is the low of the new trading range. So right now, let's wait for the, I mean, let's wait for the inducement to be formed. But currently, this here is our minor inducement. I said the minor inducement is less impactful. So right, anyways, you can clearly see price now has made another valid pullback. So that's our major inducement. So now if price takes this out, then I'll be looking forward to mark the POIs. All right, so, and exactly right there, we can clearly see price just took out, I mean, just swept that inducement and gave that big reaction. And if you clearly remember, this here is the first entry module after price has taken out the major inducement, like exactly right there, and creates like valid a valid reversal. That's a valid I mean a valid entry. And this one here, of course, is a confirmed swing point. So if price breaks past that, that's a valid break of structure. All right, so you can take the entry from there, and obviously targeting the higher time frame external liquidity. So right now, this here would have been a great entry if price ends up reacting, or price ends up respecting this inducement sweep. And this here is a major inducement. So I mean, the major inducement is more impactful. So there is some possibility that price will eventually respect the sweep. All right, so let me continue running price. Right, and exactly right here, you can clearly see price respected the sweep and it's actually heading up. So this means we are currently in a new trading range. And right now, where is our major inducement? All right, I can clearly see prices. All right, our major inducement right now is this one here. That's our major inducement. So if price breaks past this, then we'll be looking forward to mark the POIs and then react. All right, price has taken out that. So right now, it's the right moment to mark the POIs. All right, so right now I can clearly see this one here as the, I mean, that one as the extreme order flow, but you can clearly see it's mitigated. So I'll be shifting to this next one, which is this one here. And we can clearly see that it's not mitigated. So right now I'll be looking forward for price to actually mitigate this extreme order flow, because there is no any other order flow that is unmitigated above. Alright, so once price mitigates this, and like I said, I don't wait for reactions. I usually just place buy limit orders. I'll place the sell where I placed on the previous order, and then this here I will extend it obviously till there. So the target profit actually depends with you. You can actually just set the target profit on this swing point, I mean right here, or you can have a fixed risk to reward, let's say a 1:3. So by the way, this one here is a confirmed swing point. So if price breaks past that, that's a valid break of structure. So right now you can have a fixed risk. So let's say you can have a 1:3 and say this here is my like a fixed TP, or you can just target the external liquidity if you are looking forward to make like good profit, or if you're looking forward for huge profits. All right, so right now you can see this is a 5, this one is a 7. So you can see like lower time frame executions provide good risk to reward. So it wouldn't be making sense for me to place right there. All right, that's a 1:12. All right, but price may end up stopping me out and react from this. And react from this rejection block. So just place your stop loss a safer place where price, once price takes you out, like there is no any chances of having a buying opportunity at that moment. All right, so let me continue marking price, and as you can see, price mitigated the extreme order flow exactly right here, and it's actually now reacting. All right, let's say you placed your stop loss right there. This trade will still be right for you and wouldn't have been stopped out, but believe me, it's not worth it. So just stick with what I'm actually showcasing. All right, so and you can see price is heading up. All right, eventually price made that break of structure exactly right there. So this one here is our low of our range, and our high of our range is actually where it is. So where is our major inducement? This one here is our major inducement, and obviously, all right, let's see if price takes out our major inducement before we mark the price. All right, price ended up creating another inducement, another valid pullback, recently formed valid pullback, and the liquidity resting below that low is what we call the inducement, and in this case major inducement, because it's after the break of structure. All right, so right now I'm waiting for price to take out the major inducement before I consider marking the POIs. All right, and exactly right there price has taken out, yeah, this here was a sweep, but price didn't give me a convincing buying opportunity or a convincing buying momentum. So I had to wait to see, and price eventually violated the sweep. So right now it's the moment to mark the order flows. And just by the use of the eyes, I can see that this one here was the extreme order flow, but it's now mitigated. So this one here is the extreme order flow, so that will be our extreme order flow. And since that extreme order flow is not on the extreme of the trading range, so, and by the way, this one here is the trading range high, meaning if price reverses and breaks past that, then that's a valid break of structure and we will be in a new trading range. But currently we can clearly see price has taken out the major inducement. This one here is the extreme order flow, and since our extreme order flow is not on the extreme of the range, this means we can get an order block below here. And we can clearly see that this one here is the order block or the candle that is associated with a fair value gap, and it is on the extreme of our trading range. So if price fails the extreme order flow, then we'll be looking forward to take the entry from the extreme order block. So right now, since the order flow is primary and the order block is secondary, this means I will be placing the entry from the extreme, the buy limit order from the extreme order flow, and stop loss, at the trading range low. Yeah, that will be making sense, and obviously target the higher time frame external liquidity. And if I check, this one will give me a 1:2, and for like it wouldn't be making any sense for you to actually shift into the lower time frame for just a 1:2. So I think for this one you'll need to actually wait for price to give a reaction. It will be worth it for this one to do that, because doing this, not unless you want to just take that 1:2, but if you want like good risk to reward, that is 1:5, 1:to whatever, you will need a reaction from this extreme order flow before that, or just place a buy limit order from the extreme order block, because price can sometimes fail the order flow, the extreme order flow, even though it's the one that is primary. Sometimes price may fail it and actually react from the extreme order block. So this will be making sense. That is a 1:9, a 1:4.9. So this one here is a 1, like this here is making sense. All right, so right now let's see what price does. If we see a reaction from this this extreme order flow, a valid reaction, a valid reversal reaction, we will take the entry. But if, or otherwise, let our buy limit order be on the extreme order block, so as we secure a 1:5 approximate, that is 4.9, so approximately a 1:5. All right, so let's see what price does. And as you can see, price didn't even give a small reaction from the extreme order flow. Price ended up reacting from the extreme order block, and right now let's see what price does. All right, Now, this is what I was talking about. So let's say you had seen this reaction and you just placed your, obviously that's a valid reaction, and your stop loss below the reaction somewhere there. You see, price would have stopped out. Like you can clearly see price would have stopped you out right here. So that's the reason why I'm saying that placing the buy limit order or placing the limit order actually removes these needs. And also, where you set your SL is very important. Don't set your SL below the POI. Set the SL at the trading range low. That is if there is a major inducement. All right, so let's see if price ends up taking us out or ends up reacting from our POI. And as you can clearly see, price made it out to the break of structure. Made it out to the internal external liquidity. And currently we are in a new trading range. Right now, this one here is the minor inducement. But like I said, trades that involve a minor inducement have a lower probability of winning than or compared to the trades that involve a major inducement. Alright, anyways, that's the minor inducement, and this one here is our low of the trading range. So this here is our current trading range. So let's see if price eventually breaks. Alright, good. Price creates now a major inducement. So now this here is a good a good trading range. And right here, just by the use of the eyes, I can see this one here is our extreme order flow, and that extreme order flow is not on the extreme of the range. That's an extreme order flow because you can clearly see what I'm marking here. These are the order flows, and you can clearly see price has mitigated all of them. Price has mitigated this, and this one here is the one that is left live. And where is the extreme order block? The extreme order block is right here. So again, it will not be making any sense for you to place a buy limit order here, and obviously I wouldn't recommend placing a buy limit order and setting your sell here. You wouldn't know if price will react from that zone. So SL, obviously place your SL at the low of the trading range, and target profit of course at the higher time frame external liquidity, or it depends with you. You can place a fixed risk to reward, but as you can see, this risk to reward is even lesser than 1:2, meaning not worth it. So this means then I will not take this kind of a trade. I will not place this buy limit order. For me to take this trade, then I will need to either risk an entry from here when I see a reversal, or just place a buy limit order like we did before from the extreme order block. Stop loss of course at the low, since we have our major inducement. So stop loss at the low, and target profit of course at the external liquidity. The 1 hour external liquidity, exactly right here. And you can clearly see that that is a 1:7. This one here was a, yeah. So you can see the risk reward is actually good, and it will be making sense if you're actually shifting into the lower time frame for a good R. Alright, so right now price has taken out the major inducement, and this one here is not a valid sweep. So this one here is our confirmed swing point, and if price breaks past that, we are currently in a new trading range. So this one here is the order flow. I'll be waiting for a reaction, a good reversal reaction from the order flow before I do anything, or before I participate into the trade. Right, and exactly right here, price is actually right. I can see the wick is actually extending. So this one is the extreme order flow. We are currently on the extreme order flow. So let's see. And right here, you can clearly see like this here is a good reversal, like a good reversal reaction. So I can just place my right there stop loss of course below the low or below the reaction, and target profit of course the higher time frame external liquidity, that is right here. That is a 1:3.5. Yeah, that's a good risk to reward. So let's see if price ends up stopping us out, or it end up reacting from this, because if price stops us out, this means it's looking forward to react from the extreme order block. All right, so let's see. All right, what is price doing? Right, price consolidated and took out this low. So anyone who placed his SL like exactly at that, like exactly at this low, you can see we would have been stopped out, and then price going directly towards this TP. So that's the reason as to why I'm saying you should place your SL a few pips below that, because sometimes price may just decide to stop hunt the early buyers. All right, so and you can see right here price is actually heading into our direction. So this means at this moment I will drop this sell limit order, I mean this buy limit order, because price is currently in a new trading range. So this buy limit order is no more valid, and that's when you cancel it. All right, so right now let's see if price creates another trading range, I mean another reversal. And now this is all right, this one here is a minor inducement, and we say trades that involve a minor inducement have a lesser probability of working. But let's see, that's a minor inducement. Of course, this one here will be a confirmed swing point. So where is our POI? All right here you can clearly see that this one here is our major inducement, I mean major order flow, not major inducement. So that's our major order flow, and there is no any decisional, there is no any extreme and any engineering liquidity. So this means right now I'll be waiting for price to come here. I will not even wait for reaction. I'll just place my buy limit order there. And since this one here is a trade that is involving a minor inducement, this means our trading range low is our major inducement, and price may decide to come all the way to sweep this major inducement before actually giving that reaction. So to avoid such, or to avoid being stopped out because of such, I will extend my stop loss up like a few pips below here. I think that will be making sense to avoid like the sweep out, or to avoid the stop out. And obviously our target profit, it will be on the higher time frame external liquidity, and you can see the risk to reward is pretty much good. That is 1 point, all right, nearly 1:3, so that's good. And so right now I'll run price and see what price does. All right, and right here let me reduce the speed of these candles. All right, exactly right there our buy limit order got triggered, and price is actually reacting after the extreme order flow is mitigated. All right, so let's see if price eventually makes it out to our full TP. All right, price is consolidating at the moment, but it's actually going up. Right there price made it out to the internal external liquidity, and right now let's see if price made it out to the higher time frame external liquidity. Exactly right there price made it out to the higher time frame external liquidity. And as you can see, that's the reason as to why people just love the lower time frame execution, because look at how many trades you would have spotted from just one trade decision. Because if I had just entered from the 1 hour, I would have probably spotted like a 1:4 or a 1:4.5 or a 5 maximum. But if you get like into the lower time frame, you can clearly see that you can spot trades that have a good risk to reward. And for me, actually, here I was being conservative, meaning I'm actually reducing the risk to reward. But I know some of you guys are very aggressive. Some of you guys just place the SL like below the POI and all of that thing. So some of you would have even gotten like risk to rewards of like 1:10, 1:12, and that makes sense. But I actually prefer being conservative, because being conservative will increase your win rate as well as your end term. I mean, as well as your end month return. Right, guys. So this is actually all about the top-down analysis, and you can clearly see that I have continued the buying process until the higher time frame external liquidity. So once price has made it out to the higher time frame external liquidity, you see all of this, like all that we have marked, like right here, all of this, like all of this price action, like the internal price action that we have marked, we will be ignoring this. And once we dive now into the 1 hour, we'll be deleting all of this, since now we will be in a new trading range on the 1 hour. Right, guys, so I will be stopping right here, and I believe you have learned a lot in this video, and this is actually how you will be doing the top down analysis. So right now it's upon your decision to either choose taking entries based on the lower time frame, or actually taking direct entries based on the same time frame, or based on your one time frame, that is your higher time frame. So it's upon your decision. And guys, this here is the final part of the video course, and if you have made it this far, or if you have actually watched from part 1 to part 15, then I can confidently say that you have everything you need to become profitable. So you just rewatch, practice, back test, front test, and you will actually get it, and all will be making sense soon. So wishing you all the best.